Alright, boys. Bit of Max Richter. Having trouble loading my charts. Seems to be an issue with my G at the moment, which is where I get my pro real time from. So may have to do it just on the MT4 charts. Not fantastic, but you know the show must go on. Fairly interesting open. I mean, interesting but boring at the same time because it's nothing really changed too much. We've got to buy on the Aussie. Alright, that's the sort of trade I was looking for anyway. So straight off the bat, first thing we're going to do is do some maintenance here. Look, it may roll over again, but I just want to sit to the sidelines, take a little bit of profit. That last little move higher at the start of Europe is enough for me to suggest this is over. We did get triggered here on a Euro Swiss though, so nothing crazy. But for me, I was looking for a couple of situations where I can buy some Euro Swiss, and I wanted to actually hop across and buy some Pound Swiss. I'm going to buy full lot. And we're going to put a stop just at 119, say, ooh. Yeah, that'd be enough. So it's a relatively large trade to begin the week in terms of risk, about 2,000. We're going to be targeting pretty high, 125. Now, why now? Just a couple of things lining up. Namely that the euro is so weak that euro pound selling, which is another way of playing this. I suspect the euro is going to be weaker than the pound slowing down. Some conciliatory tones from May. And we're relatively quite low, and the market's not expecting a rally. A few things happen there, just a little cheeky rally could happen, and the euro in any sort of weak US dollar is probably going to underperform. So the timing's right. Timing's right for just this euro pound to trend a little lower. Nothing crazy, just maybe 87.50 over the coming week. That would put the pound Swiss at around 125. And if the Euro Swiss also has a little rally, then we might get a kicker to 127. Alright, depends on how the Euro Swiss really plays it. I mean, it hasn't broken range for a long time. It could be the time it breaks range. But as long as the Euro is still, it will come from the Euro weakness. As long as the Euro is really weak, then you should see Pound Swiss at least make some gains. Okay, so that's my trade that I'm looking at this week. Could obviously be wrong. Buying the pound is every time risky here. I'm just buying it against what I feel is the weakest pair out there, the euro. And I mean, a few clients want to buy this. I'm like, oh geez, okay, what are we looking for? Where are we looking for 30, 40, 50 points? That's possible, but also is a slide down of another 200 points. Give me a reason here. Give me a reason to be buying the euro, and I'll listen. If it's just that the market's fallen too far and there'll be a retracement because the euro is not really trending at the moment, yeah, shit. I mean, there's safer trades out there, right? I mean, why not just buy the Aussie rather than buy the euro? If that's your inkling. Dollar yen's very quiet. Not much to say there about the dollar yen. Sideways action. Interesting, but it isn't pushing higher. I suspect over time it will. Aussie Kiwi. Look, we found support at 106. Had a dip and then had a new higher low. Not a bad little buy as well. We're getting pretty close to the New Zealand rate decision. Very likely that they do cut rates, so I'm not afraid of buying here. Aussie's definitely got some potential. Kiwi could come under selling pressure as the market changes focus towards the RBNZ. That's November 10th. So just after the election. Risk will probably be on if Clinton wins, right? But that's great for our main trade that we're still holding here, which is the dollar Mexican. So dollar Mexican is just grinding lower. Had a nice little bounce, pull back down. The market can now extend lower towards that lower 18 level where there's a lot more support, a little bit more danger to get through. The stops must be feeling, if you're long, I mean, I don't know what you're hoping for here. You're hoping for Trump to come back, right? Because there's not much reason here for the market to rally. You need oil to crash to really get the Mexican being sold here. So there's still so many positions to clean out. Positioning wise, we can still get a big move. Look at the size of the move. You know, the market, we're not asking for even a 50% retracement. We just want to pull back to 1750. So this is really possible. All we've got to do is break that resistance. We'll see how that resistance. I'm going to lighten up, obviously, as we get into 18, testing the low 18s. I'll probably close out these two trades, let the 0.5 run. Okay. So that's the plan anyway. So let's put a little take profit. Little take profit. No, we don't want to be too crazy. Yeah. And a little take profit. So we might get triggered in the next couple of days. I think the polls are extending double-digit leads now for Clinton, so this is developing nicely. Where's the Aussie strength coming from? I mean, look, still high yielding. The selling that we saw on the back of the weak unemployment numbers and the euro-led US dollar buying, first one, second one, I mean, that's done, right? That's factored in, and this pair just grinds back up. It was looking super strong last week. Before that, its legs were cut out. No reason it can't reclimb. The sellers have a little bit of convincing to do the market here. You really need overwhelming US dollar strength to get this to reverse, or you need CPI on Wednesday to be weak. Okay, so that's otherwise there's a lot of buying going on in the Aussie, and Aussie Kiwi is going to be a main leg of support. So sticking with the trends, sticking with the themes that we worked on last week, as long as nothing changes, everything should be fine. Dollar index. Dollar index. People are asking me about selling this. I think it's going to hit to parity. Same as dollar Swiss. Where are you, dollar Swiss? This is why I don't use these charts. It's so hard to track your charts. Dollar Swiss probably going to hit parity sooner rather than later. It's closer to dollar Swiss than the US dollar index, but yeah, I'll be still holding. Not parity 100, right? So if you can break that, we can talk about 105. Probably not going to. US dollar hasn't pushed through too much. Now, if there is some US dollar selling and does look like there's fatigue coming through as we head towards 100, yeah, we can talk about buying the euro at that point. But, you know, that's not really the main story, right? You don't really want to be going against the trends at all. So let's just stick with the easy trends that we can find. The trade we're going to gear up for after the Kiwi sell-off, after the Kiwi underperformance, into the RBNZ, and hopefully they do cut and potentially even give guidance of cutting again, then we can buy it. Okay, that's a pretty clear trade to me, to buy the Kiwi anywhere underneath 70 towards its 200-day moving average, towards around 69.50. So we actually want this to fall. We want some heavy selling coming through, because at the end of the day, it's just a better Aussie once the selling is done. Yeah, we'll talk more about that. That's still a couple of weeks away. Not too far now. The markets, days are moving very quickly. Next week we got the non-farms. So that's critical for the December rate hike. That's critical for the US dollar. That's critical for your euro rally or rebound, and it's critical for your dollar yen break of 105. That whole thing next week. Pound's probably just going to do its own short squeezes in between that, right? That's just the way the market's set up there. Let me check some of those. Euro USD will hit 1.89. Euro USD? What pair are you talking about there, mate? You mean 1.08? What? With you and traders? I'm talking to you, buddy. Yeah, you want to hold short Kiwi CAD until we get to most of the move will happen pre RBNZ cut. The the market's priced it in, so it'd be like that scenario where they cut last time and then it rallied sharply. This time the markets actually fell aggressively. So they may rally aggressively afterwards again. Depends really on what he says. They might have learnt from last time. They might just talk it up. Even if they have no intention of cutting rates, they may talk up their willingness to do so. So yeah, it should be interesting times in the Kiwi, but right now we sell in anticipation. Not the Kiwi against the US dollar though. Yeah, very hard to sell the Kiwi against the US dollar when you're buying the Aussie against the Kiwi, against the US dollar. Same with dollar CAD, right? Dollar CAD, it's like a heartbreaker of the commodity currencies. It's taking over the role of New Zealand dollar just to bust people. Probably going to pull back a couple hundred pips before extending. It's very hard to see it breaking out of that channel. It doesn't really want to yet. So I'd be looking to buy maybe 132-ish, 130, 150-ish. These are broad channels. No real reason to see it overextend there while oil is strong and commodities in general are strong. I mean, obviously there's some weak data out of Canada, but after that's passed, it'll go back to just grinding it. Selling Euro CAD, buying CAD yen. Those sort of trades will come back into vogue. It's unlikely this is the big one. As you can see, it hasn't really been trending for a long time. I mean, it could, right? Trended nicely last year, and then just crushed accounts on the way back down. But it has been stable and relatively well behaved. And so at the upper end of that channel, you want to see a pullback here of at least 100 pips, right? No reason to rush into this trade. Unless you think this is the big one. Could be. But it's a heartbreaker, right? It's been false breaking a lot. How much do you risk per trade, Dave West? I mean, look, it depends what you're trying to do. You're trying to turn 30,000 into 50,000 in a couple of months. You're going to have to risk a fair bit of your account per trade. Maybe 5%, 10%. Anyone, risking more than 10% willy-nilly is obviously going to have a high chance of blowing up their account. Obviously, if you're risking 10%, you don't really care about trading. You just care about, more towards the gambling, making money quickly. And so it's not a long-term adventure. It's more like I'm trying to smash and grab the bank. Yeah, I want to make some money as quickly as possible. And those guys may have a couple million in other assets, right? So, for them, it's not a big deal. But for the average punter, if you've got 50k in the bank, so let's just say you got 20k in the bank, and you put 5k into your trading account to try and get some extra money, I would work on consistency. Yeah, I would work on not risking more than, $500 on any set of open ideas. If you can get risk management early, there's a chance for you to make money. If you don't employ risk management, pretty much stringently, there's no chance that you get to even learn the game to the point where you'll make money. Alright, so first year, if you can break even, you're doing great as a trader. But more importantly, if you've learnt to put stops on every trade or have trading plan on every trade, or you're just you've developed emotionally as a trader, that would be great. Okay, then you can talk more seriously internally with yourself about trading bigger. Because once it gets bigger, the money becomes real. When you're risking $1,000, I mean, that's $1,000. Unless you're the sort of person that's built in a way where you can detach yourself from your money, then it is very hard for you to trade at levels which represent life-changing amounts of money. Yeah, so if you have 20,000 and you're risking 5,000 and you get into drawdown of 3,000 and you put in another 5,000 to protect your position because you can't afford to lose at 5,000, you're making mistakes. You're actually you're going down the path that 90% of traders go down, which is trading emotionally. Yeah, it's so. Look, I can't stop people doing that, but that, I work as a dealer, right? I've done this for 10 years, worked with thousands of clients. I've seen the same emotional traps again and again. Too much to lose. You find out how much you can lose in the first year, usually. All right. Get past that, then you can get to the stage where you're developing on your strategy, learn a couple of pairs really, really well. Once you've got your risk management locked down, then you can work on your trading sizes, right? But at no point really, I mean, it's hard. You should let the account grow organically. The dream that you're going to turn 5 into 100 and that you're trading, that you're different is just a dream. I mean, just let's be realistic here. You're not autistic enough. Yeah. Or maybe you are, all right? But let's just see. I'll tell you what works. Being rich. Being rich and trading with money which doesn't matter. Those are my best traders. Okay? Comes with a mindset that trading with money they can afford to lose. They can let trades run because they've got profits. They're going after big profits. Those guys are the best traders. So you got to trade like they do, but with smaller money. Trade 1,000 as if you're rich, and let's see how you go. But it's hard. It's hard. Look, it's anyone tells you that you can make a lot of money very quickly with no risk is just lying. So I would, Dave, stick to 5% per trade. 2% is a bit unrealistic in the 400 to 1 leverage world we live in. It's just, we want to make a little bit of money, right? 5% underneath 20,000. Then we can dial it down to 2% above 20,000, right? By the time you get to 100,000, you should be risking 1 to 2% a trade. An absolute minimum Godfather would be about 1,000, mate. Okay. $1,000 to trade 0.05. All right, let's have a little look at some bank research, boys. NFX, I like Aussie yen. I just don't know about the yen at the moment. I like the Aussie. I just don't know about the yen. Trading is not that hard. Losing is hard. Yeah. That's the... At the end, it's all psychological management. Don't trade angry. Don't trade drunk. Don't revenge trade. Easy to say. Hard not to do. I'm still looking to buy the pound. More than I think I should be because I lost so much money on it. I mean, maybe a fair bit of that's the flash crash, but I shouldn't have been buying it anyway. I was just looking for easy money. This is before the flash crash. Now I definitely shouldn't be looking to buy it as much as I have because I'm like, I'm going to get you. I'm going to get you. And it's only one headline away from Merkel. or May to get some heavy selling coming through. All right, and I'll get stopped out. You can add that loss to the rest. All right, so it's self-reflection is important, and self-awareness even more important. All right, develop your self-awareness. Understand why you're making a trade. Understand why you're looking at that particular pair. Why, understanding your urge to counter trend. Searching for trending pairs. Making trading as easy as possible. So 109.40 looks like it may come back into play here. I wouldn't mind selling a little rally here. If we get a nice little bounce back to 109.30, 40, 50, I'll see what the reason is. If it's just a retracement, then yeah, I'm in on that. I get all my bank research from FXWW. It's a chat room in Reuters that you can access for $60 a month, I believe. Led by some ex-Forex Live traders. Sean Lee's one of them. So it's a nice little chat room there for getting your knowledge together. Not really much resistance up here for the dollar Swiss. Looks pretty clean here, that break. Same as the euro, right? Just over time we should just extend here. Especially as we go, as long as the NFP doesn't disappoint too much. I think we've got a nice little trade set up here. NFP's next Friday, guys, so it's not that far away. We may have bought Aussie a little short. I mean, we may have closed the Aussie trade a little early. It might be heading back down towards that 75 level. I don't know. I just got this sneaking suspicion that it's going to outperform. Similar to the CAD, similar to the Kiwi. Just generally outperform the Euro and the US dollar while risk remains on. And risk is definitely on, led by the DAX, post-ECB. Very little reason to be short risk. Therefore, these commodity currencies should do well. Relatively. Now the Kiwi is a little bit of the exception. That's why we're selling the Kiwi, buying the Aussie. But that's just more of a commodity currency race. Aussie, Canada first, New Zealand last. So it's a relatively safe trade. Oh, so these guys technically think we're going to break higher. It's a big call. Big call. I just don't see the fundamental reason for it, right? If anything, strong US data sort of lends a support to the CAD more than the other pairs. But you don't know, we'll see. Buying the Euro Yen as well, not a bad little trade. Let's just be careful, yeah? Well, let's just see what the Euro wants to do, and if the dollar yen wants to make its move towards 105 before we commit to this. If the dollar yen wants to muck around while the euro extends towards 105 itself, 1.05, then you've got a move back towards that 110 level, which obviously then becomes even better. But we'll check on the risk management, the risk appetite down there. At some point, dollar yen's going to lead the euro yen higher. That's the most important part of that trade. And euro pound is the one that we're selling via buying pound Swiss. We're expecting euro pound to fall down toward 87.50. They're looking for 87.25, but we're not going to be greedy. See if we can find the early morning read. Not out today. Yeah, don't drive and trade. Yeah, good luck, guys. Just be safe, yeah? Don't add to positions. That's the main problem. That's what gets you in trouble most of the time, magician. Just adding to positions. Just take the losses. I want to see your drawdown come down. Then you're making progress, yeah? Stronger US dollar should help the euro decline to the lowest range. Ooh, huge comments. Captain Obvious here in the Credit Suisse technical department. We haven't looked at Deutsche Bank for a while. We're going to have a look at that tomorrow, okay, guys? We're going to see how it's faring, what the latest is on it, whether that it's coming back. It seems like the raising of capital has put a lot of the fears to bed. Latest headline I saw was some Chinese investors, some Middle Eastern investors. So, that's helping, right? That's helping stabilize sentiment for the DAX as well, and let alone the ECB hinting that they're going to continue QE at the full rate. Yeah, I don't know. I can't see too much below 105 for the euro. So, this is the oil price. This is the tips. If tips start to grind higher even further, then you might start to see not just inflation expectations, but yields start to shoot higher. Now, US yields higher is very important for the US dollar story. It's very, very important for the dollar yen story. So keep an eye on US yields, keep an eye on tips, keep an eye on US CPI. And if we start to see energy inflation come through, you should start to see bond yields start to rally. And that's really important. It's not talking about here unless it is at some point about dollar yen and the yields, but dollar yen and the relationship to yields is extreme. Alright, so that's the main way. When you hear yields are rising, go check what's going on with the dollar yen. Most likely you're going to see the dollar yen grinding higher. God, there's no chance for Trump. Jesus. She would have to have a heart attack, right? What can he say now to backtrack? It'll be such a big upset. It's like 10 times bigger than the Brexit upset if it happens. So the CPI can't be... You can't underestimate how important it is. If you don't know about Aussie dollar trading too much, CPI is tier 1 data. And we wait 3 months to get it. So every quarter it comes out. It's been stubbornly low. We need to see a pickup in CPI. Otherwise, the door is still open for the RBA to remain dovish. If it picks up, the RBA's road towards neutrality and holding rates for the whole of 2017 is pretty much a surety. Okay, so you got to keep that at the back of your mind. If you don't trade it, I don't know of any country where the inflation is as important as is with Australia. Maybe New Zealand, but that's about it. Yeah, I love this trade. Who is this guy? Who is this guy? I like it. You don't even have to put in the... You don't even have to put this in. It's beautiful. I don't know about this bit. High probability trade, can't lose, easy money. What? Maniac. Pound by Jay. I love it. No, he's short. I hate it. What are you doing? What are you doing, Jay? We're buying this, mate. Remember? We're going to take out some stops. We're on the hunt. How are we going? Pound Swiss. Oh, okay, it's not moving much. I thought you were going long there with us, Jay. Why are you being so sensible and selling the pound? What's wrong with you? I mean, it's not too bad, right? Let's bring it up a little. Suppose he's going with the trend. Aussie cat short. I don't know. We closed this trade, right? After the rally started to pick up steam. It was like, okay, well that, and then we got. If you're still in it after that, you got smashed here. I mean, this is hard. This is hard. Aussie's the leader of the commodity pack. I suppose the level's good. Dollar yen short. Ooh. Dollar yen short. Yeah, I can see what you're saying here, right? This is looking like it's stalling. Going to have a pullback. It's just how big a pullback and why. How do you get that? You're going to get yields reversing, or you're going to get US dollar weakness. Where's this going to come from? To me, this is consolidation, and the easiest path forward in the current environment is higher. But I see what you're saying there. And we've got a very similar trade by Brexit for the same reason. Short gold is a common trade going through the markets at the moment. I definitely like it. Where have you put your stop? 75.50. That's fantastic. Yeah, I like this stash. I like this. Dollar CAD long. 7 hours ago. He hasn't seen the price action probably in the last few hours. Yeah, let's just see about this. This is like similar to selling Aussie. You got to give me a way forward. And I just don't see US dollar extreme strength happening just yet. We'll see though. I mean, CAD's not my game. Aussie's my game. So I'm just playing a little bit via my feel for the Aussie. Yeah, but not bad trades, boys. All right. So yeah, not much happening today. a little bit interesting the way it's developed, that the euros, continue to fall. I'll be looking for more of this US dollar strength broadly, a little bit of stability on the crosses. Euro Aussie obviously is a nice little trade on the short side. Just pick your levels well. Maybe a little bit higher if we can. You've missed your entry today if you're not in already. But they've got a lot of downside here. Just keep an eye on stock markets as well. Make sure that they remain positive. If that happens, then you got some potential. If stocks turn, you got some potential news trades, and we can talk about that tomorrow. But if stocks remain strong, DAX remains strong, then stick to what we talked about today, following the trend. We'll probably be gearing up. This is the last week in October, right? I mean, the last week of any month is very slow in data, so it's all about picking your entries and following the trend. You don't have to overtrade in the last week of the month. Alright guys, trade safe. I'll be back tomorrow. A little bit more update. We'll see if I can get those pro real-time charts working from... Well, I mean, it's coming from the IG department. Yeah, they're down at the moment, so we'll have the usual charts back tomorrow.